eso. Y vos decís, bueno, David Goggin lo hace. Bueno, David Goggin, o sea, eso es parte de su chamba. Mi chamba particular, y si se fijan, y el concepto de este video justamente es, ¿cómo puedo hacer yo para estar rascándome patas arriba, mirando las nubes pasar? Porque mi objetivo para obtener dinero es justamente después obtener tiempo. Tiempo en el cual yo me puedo rascar, está bien, tener tiempo libre. O sea, yo, el nivel de riqueza que yo tenga lo mido en la cantidad de tiempo libre y tranquilidad que yo pueda obtener. Vos ahora mismo podrás tener, no sé, el concepto de que tanto puedes viajar, que tanto te puedes mover, que tantos amigos puedes hacer. Bueno, está bien, cada uno lo mide como quiere. Y si se fijan, esto de no perder nada de tiempo en la vida pega, sobre todo, aún más. Si estos conceptos, esta mentalidad de tiburón les pega mucho más fuerte, más duro y genera mucho más seguidores entre jóvenes de entre 18 y 24 años, justamente porque recién están empezando, es decir, están todavía estudiando, y por ahí te dicen, ya tenés que ser millonario, no para esta edad, ya estás tarde, viejo. Y hermano, recién están comenzando. Y les pegan justamente a eso porque son los que más atrasados se sienten en la vida. Claro, recién acaban de comenzar la vida adulta, no tienen herencia, no tienen familia, no es como antes la cosa. Y claro, en otros tipos de 30, 40 años que ya obviamente van manejando un BM, vos decís, uy, quiero eso. Es muy obvio en esas edades sentirse atrasadísimo. Yo también me sentía así. Si no estás leyendo libros en tu tiempo libre, bueno, estás perdiendo el tiempo, ¿viste? Como si leer libros te fuera a relajar mucho la cabeza, ¿no? Porque un libro inclusive te forma, te educa, hace que tu cerebro trabaje. Y es muy bueno eso, por supuesto. Pero nuevamente, todo en su justa medida. No quiero que de acá salgas diciendo, entonces yo voy a jugar 20 horas por día, total, después ya tengo dinero. No sé, hace lo que vos quieras, pero mi concepto es que así como la semana tiene 7 días y un día es muy aconsejable descansar, así como el año tiene 365 y es muy bueno tomarse vacaciones de vez en cuando, o también, por supuesto, cada día tenés que dormir. Bueno, así igual, es muy valioso, según Salomón, por cierto, en Eclesiastés, saber cuándo descansar y disfrutar de todo el trabajo bien hecho que uno haya realizado. Siempre les cuento la historia de mi abuelo, ¿no? Alguien que durante toda su vida laburó y vos decís, ¿para qué? Y obviamente él lo disfrutaba ese laburo, pero también es muy bueno en todo ser humano saber alegrarse y obviamente ser agradecido constantemente, pero tomarse un tiempo para decir, ya está, estoy acá, me relajo y disfruto de eso que tengo. Y este video en particular, por cierto, se lo quiero dedicar no a ustedes que por ahí ya juegan 12 horas por día o que ya están vagueando demasiado. O sea, hay gente que ya se va de mano y dice, el fitnico me dijo y listo, ya está, lo hago. No, hermano, para vos no este video. Este video es justamente para aquellos que se están comiendo la cabeza demasiado y no le dan tiempo al tiempo y, por supuesto, tienen un concepto errado de lo que significa el éxito o cómo es que pueden llegar a obtenerlo. Yo te tengo que decir en este momento que yo soy un vago y aún así soy exitoso mentalmente, internamente, o sea, en lo más profundo de mi ser soy un vago, pero aún así he chambeado como un burro. Obviamente va a caer mi abuelo y me va a decir, no, yo trabajaba más duro, y mi papá me va a decir, no, yo trabajaba más duro, ¿viste? Y yo después le voy a decir a mi hijo, no, yo trabajaba más duro, ¿viste? Todo el mundo trabaja más duro que el otro, ¿no? Por supuesto. Pero en lo que respecta a mis fuerzas, yo he trabajado todo lo que he podido y en el proceso, si yo ahora mismo me muriera, yo diría tranquilamente que disfruté también en el proceso de todo eso que fui obteniendo con mi trabajo. Y por eso te digo que este video no es para vos, vago. Este video es para aquellos que laburan demasiado y no descansan o que se comen demasiado la cabeza pensando que no están donde quisieran porque no están trabajando demasiado y por ahí trabajan como tontos en lugar de trabajar inteligentemente. No multiplican su fuerza, pero bueno, eso ya son temas para otro video. Ejemplos de cómo todo esto se aplica en distintos apartados de la vida. Bueno, en el deporte, cuando recién tenés 18, 20 años, hay gente que lleva 10, 15 años más que vos en esto. Por ahí vos les ganás en habilidad, pero ellos ya tienen más reconocimiento, más historial, más derecho de piso. Salvo que seas Messi, fíjense, 1 entre 1000, no los vas a alcanzar en un día. Lleva tiempo, esfuerzo, sacrificio. En definitiva, constancia. Lo mismo en los negocios. Si no heredaste nada, si no la pegas con criptomonedas o algo muy alocado que te haga explotar en riqueza, usualmente, como es la historia de tus abuelos, por ejemplo, que arrancaron sin nada. Bueno, si laburan mucho al final de su vida, usualmente terminan teniendo supermercados o algún negocio, un restaurante, un hotel o cosas así, que después los hijos y los nietos multiplican quizás y recién ahí se crea esa empresa multimillonaria, internacional y etcétera. Pero si empezás sin nada, usualmente sos el de tu familia el que va a poner los cimientos de la riqueza futura, o al menos eso durante los primeros 10, 15 años de trabajo, que es lo más realista estadísticamente hablando. Y todo esto se ejemplifica también con un servidor. Imagínate que entras a un nuevo videojuego y hay gente que ya tiene equipo nivel 80, maxeado, todo full. No los podés alcanzar de la noche a la mañana, salvo claro que seas pay to win y que te pagues todo, pero con constancia, la cual se logra también entre medio descansando, que es el punto de este video, vas a alcanzar a cualquiera. Y por último, pequeño apartado, todos los seres humanos tenemos distintos espectros de energía, me gusta llamarlos. Algunos más, algunos menos. Hay gente que naturalmente es muy pero que muy activa. O sea, simplemente se tiene que estar moviendo porque ya tiene hormigas en el culo, entonces, bueno, no puede parar. Hay otra gente que es todo lo contrario, entonces tienen que saber ustedes mismos cómo motivarse a avanzar, como es mi caso, o en otros casos, ayudarse a frenar. Y es ese equilibrio el cual le cuesta a muchas personas. Y si se fijan, esa mentalidad de tiburón hoy en día les pega sobre todo también a los vagos que están en un momento disciplinado de su vida, que en algún momento quieren parar un poquito a descansar en la vida, o sea, en el día a día, porque se les recontra come la cabeza, al final ni descansan porque dice, uy, no, debería estar facturando millones ahora mismo. Para un poco. Si alguno de estos puntos te dejó pensando, te dio una nueva perspectiva respecto a dónde estás vos, dónde podrías estar, te falta disciplina, te sobra disciplina. Bueno, fíjate, comentame todo eso, por supuesto, y déjame saber tu enfoque al respecto. Los espero a todos en la caja de comentarios, ahí nos ayudamos entre todos. Y por supuesto, si querés más información sobre esto, como siempre te lo dejo todo en mi libro, en el primer comentario ahí fijado. Si te gusta el video, ya sabes, suscríbete para muchos más, porque subo montones de videos de este estilo. Y por supuesto, nos vemos en el próximo. Chao.
¿Por qué no? No sé. Que hace mucho frío.
The amount of capital, by my estimate, that's flowed into Bitcoin over a month, so just 30 days, is about 40 billion. You just have to be there for those 10 best days. And they're random. They happen all over the place. Sometimes they're at the start of the cycle. Sometimes they're at the end. They're all over the place. But if you miss those 10 best days, you lose everything. Why isn't the price higher? And I've written extensively. There's two answers to that question. Very interesting watching this divergence of opinion. I think it's amazing. This cycle's been fantastic. Bitcoin is just so much bigger. So the reason why you can go from 10K to 20K in a very short order is because that's like 5 buys from Michael Saylor today. But then we also have this connective tissue that connects all the exchanges, connects all the ETFs, all the custodians, and that is Bitcoin. My journey of making all the wrong decisions is full in 2018 and 19. And then from 2019 until now, it's full of all my decisions of just buying and holding.
Give us an overview of who you are and why you're actually excited about Bitcoin.
Yeah, so I bought the absolute Pico top in 2017. That was my claim to fame. And back then, Coinbase had an extra fee for Aussie dollars. So when I was doing my taxes, I looked at my first buy, and it's above the top candle. Like, you couldn't have bought higher than me if you tried. So that's how I first got in. Bitcoin was the very first asset I ever bought. At that time, so I used to be a civil engineer, and in particular, it's a strange field of civil engineering called geotechnics. So it's everything to do with the ground. Basements, tunnels, foundations, anything where you're digging a very large hole and trying to build a train station, a bridge, something like that. Now, what's really interesting about the geotechnical side is you don't get to put steel and concrete wherever you want. And we've got textbooks telling you how steel and concrete behave. You get what Mother Nature gives you. So there's a lot of risk, there's a lot of probability, and there's a lot of incomplete information. So, you've got a couple of boreholes 50 mil diameter, you've got to design an entire train station. So there's a lot of like problem solving, and there's no precision. You really have to be ready to deal with uncertainty. And if you design it for clay and you get rock, or you design it for rock and you get clay, you can't do that. You need to have a design that's going to be flexible based on what might happen, because you just don't know. And kind of sounds like markets, doesn't it? Like, things are uncertain. We don't have a lot of information. It's a very complex puzzle. But if your thesis is too structured in the details, it doesn't matter, because the future is going to change, right? At the moment, Trump can send out a tweet and any thesis you had could implode if it was based on like a very specific set of circumstances. So for Bitcoin, I fell down the Bitcoin rabbit hole after I lost a bunch of money in the bear market in 2018. Bitcoin clicked for all the reasons, like sound money and, you know, the debt crisis you can see coming and all this stuff. So it clicked for me. But really, the thing that captivated me was markets. I found markets such a fascinating dynamic of like human beings making fear and greed-based decisions. And what I realized, my personal framework, the only constant in markets is humans making decisions. So when you actually overlay that psychological element, suddenly it makes a whole lot of sense. Why does Bitcoin go up? Because people are greedy and they want to hang on to it and buy as many coins as they can. Why do bull markets stop? Because those same greedy people start taking profits and selling too much. Well, the narrative is there is no top. And I started just looking at all these different dynamics. So it's been a fascinating journey.
Awesome. I love that you started with buying the top. There's this meme of like buying the top forever. but now you're trying to not buy the top and buy when it's kind of a lower thing.
Well, I mean, I'm still buying, right? Even at 106. And that's probably one thing that's been quite interesting this cycle. If I go back to 2021, so obviously 2018 was my first cycle, I didn't see a bull market really. I mean, I saw a little one in 2019 where it went from 4K to 14. Not really a bull, but a bit of a like insight into what it looks like when it goes up, because I'd only ever seen red candles up to that point. So that was like the first time I saw green candles. Like, hey, this is awesome. But each side feeling like it was expensive at like 50K. So I didn't buy too much above 50K. But then when it went back to all-time highs, I was like, oh man, it must be wrong. So you restart your buying. And then, of course, we had the 2022 bear market. This cycle, I've actually found myself as a hodler. And I think if you've been in this market for long enough, a cycle or two, you develop like a Bitcoiner instinct. And I found that I no longer think it's expensive sooner. So for want of a better term, when we rallied to 73K, I was like, probably a bit overheated for now, just like gut feel. And then once we started pulling back to 50, 55, you know, we got down to 49, I was like, value. So my behavior pattern shifted to, ooh, that's a discount. And even up here, once we went to 100K, I was like, yeah, it's expensive. Pull back to 90, pull back to 85. Now I'm back in. So definitely feeling this like acclimatization effect much sooner. And even now, we're chopping around 105, 106K. If we pull back to 95, I think that's value. So like I'm acclimatizing to these higher levels much sooner than I did in previous cycles.
And you're also connecting those gut feelings and those things that you're seeing with actual on-chain data, right? You're connecting both kind of where are we? Are people buying? Are people selling? What's the unrealized loss and profit? I think that's what we were kind of looking at last time. Just for a small, I think last time we actually just went really deep into what's on-chain analysis and what can we do with that. So we have the full episode of like 1 hour. So I won't go again deep in the same topic, but just as an explanation for people, there you can go really deep, and maybe you can give us a short overview of why you're looking at on-chain data. So many different things out there. There's like following the M2, there's this power law, there's like stock to flow, like that Zeta model, like 21 years, 21 million. It's really fun how everyone kind of comes up with their own kind of structural model.
Totally. So a quick summary of, I mean, we're very fortunate in Bitcoin in that we have so much data. We have so much data and it's all transparent. And I usually bucket these, and it's funny, it's like surveying different groups of the Bitcoin economy. You can survey futures traders, you can see open interest, funding rates, volumes. You can look at options, you can see what the options market's pricing in. You can look at ETFs and spot and see where those markets are. But then we also have this connective tissue that connects all the exchanges, connects all the ETFs, all the custodians, and that is Bitcoin. Bitcoin is its own network. And really, what is Bitcoin? It's a big append-only spreadsheet. So this spreadsheet is full. This database is full of information about people buying coins, holding onto them for many years, and then selling at tops. It's also full of information of people like me in 2018 buying the top, panic selling the bottom, getting FOMO and buying again at the local high, and then panic selling the next bottom. And like my journey of making all the wrong decisions is full in 2018 and 19. And then from 2019 until now, it's full of all my decisions of just buying and holding. So I've got plenty of UTXOs where it's, some of them have been around for many years. Some of them have been around for, a couple of months. Some of them are bought high. Some of them are bought low. All of those UTXOs contain my decisions. And every single Bitcoiner that's out there, all of your coins carry that packet of information of when you bought them, when you sold them, if you're holding them still, where how long have you held it for, all of these dynamics, and then you paint a big picture of how much of the supply hasn't moved in 12 months, how much of the supply which has been held for 5 years is currently selling. And these are some of those dynamics, right? So it's a really fascinating field where we can just see all these different subsets of the market. And more often than not, like 99% of the time, they speak the same language. When people are taking lots and lots of profit on the on-chain space, people in futures markets are usually going levered long at the top. So you're like, I've got a lot of sell side from the smart guys. I've got a bunch of degenerates going levered long. Yeah, we're probably going to get to a local top soon. So you can start to like hone in. You're not trying to pick the exact predictions and all that stuff. I don't think predicting is worthwhile. But what I can see is every single time we've had this, and this all flagging, it's been overheated. So either this time it's different or it's probably overheated, and vice versa to the downside. So it's really just a story about where Bitcoin and the market sentiment is.
And it's super interesting because, like, for me, most people should just DCA and just like dollar cost average, and they will be better off with than most people. But it's interesting to look at local tops and seeing kind of where we are at the cycle. If you have kind of a bigger purchase, a big expense coming up. I don't know if you see like, do a move in half a year or do a move in 1 year or 1.5 years and pay the moving costs and pay for new furniture and like have a 20K expense all of a sudden, where usually my expenses are like 2-3K a month, and this is just 1 month where I probably need like 20K. So I might need to sell some of my savings or I'll get some money otherwise. So I think it's interesting as a Bitcoiner because it absolutely does make a difference if you hold on to Bitcoin for 1 year longer, because you can be 50% down or 50% up according to the year. So having some kind of feeling and putting that feeling into data with on-chain analysis and those models, there is some real value there in even not being a trader, like even not being like selling out and then trying to like day trade or anything like that. I think outside of that, it's just like there is some real value just seeing where we are and making kind of decisions from that. Like, if I have the decision of moving next month or in 1 year and 1 month, maybe I pick next year, or maybe I pick the end of the year. If you have that flexibility to choose where you put the expense in there, that's kind of the most value that I see in like seeing the cycles. Because other than that, I'm just buying Bitcoin. I'm 100%.
Well, look, there's another layer to it. And like I actually don't write for traders. I don't really care for traders, to be perfectly honest, because it's just not my interest. In many ways, like as a hodler, and if you spend any time on social media, you're trying to follow like what's going on, right? It's really, Bitcoin is telling us the story of what it's doing. And I think that's the other way to think about it. I very much write for hodlers. We did a survey a little while back. I should do another one. And we got like, what kind of person are you? Are you a hodler? Are you a trader? Are you a finance professional? And our subscriber base is like 95% hodlers. And I'm a hodler, right? Really, what a lot of people are looking for is they see all these narratives of, we're going to moon tomorrow, or it's all over and it's dead. And really, the data tells you a story of like, okay, here's all the narrative. Here's what's actually going on. So, a big theme this cycle has been, why isn't the price higher? why is Saylor buying so much and the ETF's buying so much and blah, 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 and why isn't the price higher? And I've written extensively, just helping Bitcoiners go, the price, there's two answers to that question. One, the price is higher. We're at $106,000 and we've been here for like a month and a half. The price is higher. And if we compare that to the amount of sell side pressure that's been going on, as you mentioned, there's a lot of OGs where 100,000 was their like stretch target. It's like, I was buying Bitcoin at $100. I wasn't. I wish I was. Other guys are saying, I bought it at $100. We're at 100,000. I could change my life, like in a really, really meaningful, big way. And there's just a lot of sell side. So really what if I'm trying to frame up for my audience, it's about understanding that we're actually just a really, really big asset now. And the amount of money that has to come in to move us, to go from 100K to 150 in price, 50% move. Most hodlers have seen 50% moves all the time. They happen up and down. But that's a $1 trillion market cap move. So in order to get that $1 trillion market cap move, we probably need several hundred billion in net capital to flow in. So it's very much about just helping people reason about, understand, take all the narrative that floats around on Twitter and just give it like a really data-driven basis. And the way I think about it, I don't want any of my subscribers to ever feel like a deer in the headlights. If the price shoots up 50%, I don't want anyone to be surprised. They should be like, oh, okay, cool, that makes sense. And here's what probably caused that to happen. And if we sell off by 30%, 40%, I don't want people to be like, whoa, I didn't see that coming. If it does sell off, it's like, oh, okay, no, it made sense. There was a lot of sell side. We didn't quite have the demand coming in. I'm not going to sell it. I'm not going to change my behavior. I'm going to keep DCAing away, but at least I understand why the market did what it did. And I had thought through those problems ahead of time. That's very much how I try to write. Just help people reason about what is a very, very complex beast. And we're fortunate to have a stack of information and data to put it all together.
And I think there's this feeling, and I just had Nico from Simply Bitcoin 2 episodes on, and it was fun because he said, oh, this cycle sucks.
This cycle's amazing. I love this cycle. It's been great.
And I think it's kind of like looking at very short term, where I think the first time we hit 100K was like early December, so about 7 months ago. So that's like, okay, if you look at the last 7 months and you just take the high there, and like the right now is like about like we're about stable at the same level, and we have gone up and down in between. But if you look a little bit outside of that, just like last 1 year, we have gone up, I think I looked at before, 60-70% in the last 12 months, which is amazing. That's over the average CAGR.
And the sharpest drawdown is like 30%. It's like, guys, this is the most robust, serious, institutional-sized. This cycle kicks ass, in my opinion, and this is exactly the kind of thing. And I love that there's two different perspectives on it. For me, this cycle's been incredible. And I was actually talking about this the other day. As a Bitcoiner who's been around for a number of cycles, a lot of these guys are saying, like, where's the volatility? Where's the thing that I'm used to where it rips to the upside and it sells off and, like, my emotions are all over the place? They miss that rush. My old man, I don't know if you use that elsewhere in the world, but old man is father. So here in Australia, there's some Aussie slang for you. My old man, I got him in 2020. So he rode the up, and then, believe me, he rode the down in 2022, and I heard about it often. When is this number going to go back up, mate? Well, I kept hearing. Now, he's very, very happy because he doesn't think about it anymore. Bitcoin is no longer a part of his, like, day-to-day, why is my, like, portfolio down? He's just watching it slowly grind up, and he feels much more comfortable with it. And if you think about the types of people who are coming on board, we're accessing new pools of capital who they're not accustomed to 50% drawdowns. They might have a 50% drawdown in their assets like 3 or 4 times in their whole investing career, not 3 or 4 times in the last 3 years. So in a way, this cycle is very much a sign of maturation. The fact that we're still like, people can be upset about it, but we're kind of following all of the previous cycles. And we're 100 times bigger. We're 10 times bigger than the previous cycle. The fact that we're following it even remotely the same way, in my opinion, is unbelievable. That's the anomaly. I actually think we should be slower, and I'm surprised that we're moving as quickly as we are. So it's very interesting watching this divergence of opinion. I think it's amazing. This cycle's been fantastic, and it's making so many more people who were not comfortable with Bitcoin comfortable to start bringing serious capital on board.
So you're seeing kind of institutions and bigger money wallets making it less volatile, but also more stable and more safe for people to invest in.
Totally. And I mean, like, if you look at the ETFs, there was a big thesis that the ETFs were just going to be, hedge funds jumping in and playing, Ponzi games and whatever, and just, in for a quick buck. And what we've actually seen is that exists. There are definitely hedge funds, but a lot of them are doing like cash and carry arbitrage. So really what they're doing is just adding liquidity and depth on both sides of the books. So there is definitely the hedge fund element. But at the same time, when we get drawdowns, and I have the numbers, here's some stats for you, on a weekly basis, on outflow weeks, when the ETFs see net outflows, the average is about $160 million. So when they have a bad week, $160 million flows out. On the inflow week, it's $780 million, almost 5 times more. So the inflows are 5 times bigger than the outflows on a bad week. So this is not the kind of behavior that you see for people who are just in here for a quick buck. This looks like buy and hold capital, right? People who are allocating to Bitcoin, actually adding it to their portfolio and saying, I'm going to hang on to this. Now, the ETFs are just one sector. We're obviously seeing that in spot markets and various other forms, but very much this maturation phase. And I think, we don't have the kind of Ponzi games that we had in previous cycles. It is a lot more serious capital. There's a lot more allocation rather than traders. Traders are trying to find what else to move to because the crypto industry's just nuked everybody. So that's not giving them their trading rush. We're seeing a bit more of this activity in these treasury companies. That's actually kind of moving into the equity market as well for Bitcoin equities. But Bitcoin itself, as it gets bigger and grows up, it's going to trade more and more like gold in that sense. And for me, I often talk because gold's my only other holding, really. And the reason that I hold gold is not because it's going to outperform Bitcoin. I know it's not. But it's the same trade. Both are sound money. Bitcoin, that's my longest duration asset. Gold is if I do need to tap capital. You mentioned before if you have an expensive, something you need 20 grand or something in that ballpark, that's gold for me. It's like my fiat that's not fiat. It's cash that's like there for the next 6 to 12 months. I'm pretty sure it's not going to be down 50%. Bitcoin could be down 30%. I don't want to sell it then. Gold, if it's down 10%, okay, that's fine. I don't mind. So, as we grow up, Bitcoin's going to move more and more into that, like, I know the value is going to be there. I'm not going to be too worried about where it's going to be in the cycle because it's doing that preservation of capital. So, I think it's fascinating.
I think a lot of people expected with the 100K something similar. I was one of them, actually. Something similar than we saw 2017. And I actually looked it up before. In 2017, we hit on the 2nd of December, the first time, the 10K. And 14 days later, we were at like 18K. So it was just taking a very short amount of time to really rush through the 10K. And now we are 7 months around the 100K, like we were down to 70K, something like that. And I think that the top was 112, I don't know, 110, something like that, which is amazing. But we hadn't had this rush through, like, we are almost at 200K. I think a lot of people kind of expected that. And I was also shocked how little the retail plebs kind of cared for Bitcoin, like those who were not into Bitcoin. When I went into family gatherings and parties and stuff like that, people were like, oh, it's 100K, oh, interesting. Like they really didn't care. In 2017, it felt different. It was my first, 2017, I wasn't in Bitcoin. I didn't buy anything at all. But still in the school, it came up, oh, Bitcoin. So I heard it, even though not being a Bitcoiner. And now I feel like if you're not in Bitcoin, you're not even really hearing about Bitcoin these days. It's kind of boring at 100K. Why do you think it's the 100K kind of different? And do you also see that the retail crowd is kind of not there as much as it was 2017 and previous cycles?
Sure. Absolutely. And I think this is where people need to understand how big Bitcoin is relative to those previous cycles. So to give you a bit of a context, you're absolutely right that like that period from like December to through December in 2017, it was 10K to 20K. in the last 30 days, the amount of capital, by my estimate, that's flowed into Bitcoin over a month, so just 30 days, is about 40 billion. 40 billion is Bitcoin's market cap in May 2017. Literally 6 months before it peaked. That's the whole market cap. So just the last 30 days of capital inflows into Bitcoin was everything up till May 2017. If we take the ETFs in total are about 130 billion in AUM. That's the market cap at the end of November. So now we're entering December, just that final week that you were just talking about. If you take the ETFs and strategy and just add those together, now we are 3 days. The value in the ETFs and in MSTR right now is equivalent to like 2 days before the all-time high in 2017. So if you just take those numbers, 2017 is irrelevant. It's so small by comparison to where we are at the moment. And those ETFs have only been around for 18 months. And Saylor, whilst yes, his balance is like 592,000 Bitcoin. If you go back to I think October or November 2024, it was like 180,000. So he's added like 60% of his balance just since November. So really, at the end of the day, we can take the last 12 months of accumulation for both of those entities, and that's the whole 2017 market cap. Not even capital, because we know that the market cap isn't how many dollars have been invested. There's a liquidity factor there. So I think that's just like a really important reference point to say that Bitcoin is just so much bigger. So the reason why you can go from 10K to 20K in a very short order is because that's like 5 buys from Michael Saylor today. That's like how much it would take to create that entire market cap move. Now, on the retail topic, you're right. I don't know about you. I've received 0 phone calls from muggles, like people who aren't into Bitcoin. 0 phone calls whatsoever. What I have found in the last, I would say, 2 months, 3 months, really since we rallied off, maybe from April onwards, I started getting phone calls from existing Bitcoiners saying, what's the best way for me to borrow and lever up to buy more Bitcoin? That's been the phone call that I've been receiving. So take that for what it will. That tells me that there's a bit of leverage and margin starting to creep into the system. But I think that the average player just doesn't care, which then goes, okay, we're not talking about retail here, because retail also struggles to move a $2 trillion market. What we're actually looking at is serious money, institutional capital, also retirement accounts. I think we shouldn't underestimate how many Bitcoiners, whether self-custody or via the ETFs, are actually allocating their retirement capital to it as well. I think that's a big factor. But we just have serious money, and Bitcoin's a serious size. You need serious capital to move it, up 50%. It'll happen, but it's just going to take longer than people expect.
It's kind of, we are now in a huge cruise ship and not in a jet ski anymore, and the cruise ship 100%. Just needs a lot of time to steer, and the jet ski you're like just going left and right, and it's like, wow, it's interesting.
And sorry, one more point to that, and George, who I think you might have interviewed recently, George the artist, that's one of his paintings behind me as well. He had a great line on he had a comment on one of my posts, and he goes, when he used to fly for the Navy, the big what are they called, aircraft carriers, when the captain yells stop, it takes 5 nautical miles for it to stop, right? So the order has been made, but it takes so long for these things to slow down. So you're right. Thinking about like a cruise ship or an aircraft carrier versus a speedboat is dead right. But also, once it's got momentum, which at the moment we have momentum to the upside, it takes a hell of a lot to slow it down. So yes, it's going to be slower to turn, and it's going to take more capital to get it moving. But once it's moving, people become like they're happy to continue DCAing and allocating, because the trend is your friend, and the trend, in a very, very big picture sense, is moving up into the right.
I love that comparison. And George is actually one of the few guests that have been on 3 times now. The third time isn't out yet. Maybe once this airs is already out there, because it was in person in Prague, so it might take a little bit longer to do it. So it either was just out a few days ago or will come out in a few days, and it was amazing. I just love. He's one of those people that has so interesting stories, and I've been 3 times with him on a podcast, and he just keeps getting more interesting. With some people, you just ran out of topics to talk about after like the first episode, and he's like, oh shit, like I probably have like 30 episodes to go with him. But that's just I'm a huge George fan.
Yeah, me too. No, the painting that's behind me, which you may or may not be able to see, but one of my prized possessions that he did is really an incredible piece. I love it.
Yeah, absolutely. Just like typing in his name, George Bodine, in Google, and you see his gallery and his paintings. Really, really cool. But you said something interesting, because actually I was wondering about that. A lot of people are very interested in borrowing against the Bitcoin, which I personally think with those rates and those durations, it's a very risky product. I personally don't do it at all. But what does it tell us in the market when there is big companies? With Strike, it's now doing that. There's Firefish. They had a huge booth in Prague. There's a lot of there's a lot of companies that do that, and it seems also being a topic that's just very interesting for Bitcoiners. Kind of, what does it tell us about the market? Is that like a sign that we are shortly or briefly before like a huge turn up and then like going down again, or is this just like a normal kind of progression because people have more Bitcoin and you want to live also?
It's both. So I would generally say that we're in the 4th innings of this bull. Now, the 4th innings is the most exciting phase of the bull. And things can get pretty explosive, no question. Like, we're looking at all these treasury companies popping up like mushrooms. People are going to start borrowing. This is all going to happen. I also just think that's a reflection of, like, I mean, you and I definitely thought about, how could I borrow against my Bitcoin? Maybe the rates and the products aren't quite where they're at now, because I'm in the same camp as you. I'm not quite ready to borrow with those kind of rates. And I want to see how the market settles down first. But am I confident that at some point in time I will borrow against my Bitcoin? Absolutely. Why? Because it's pristine collateral. It's literally the best collateral that you could possibly have. So when the market matures to the point where there are the right products for me, I'll definitely use those kind of things. So I think it's a sign of, like, people have Bitcoin as a huge part of their net wealth, right? People have been stacking away and buying away, and it is their net worth in many instances. I mean, many Bitcoiners, myself included, 90%, 95%, like most people are all in this thing. So at some point, if you want to get liquidity, you either have to sell it or you have to find some kind of lending desk. So these things will evolve. I think it's going to be a very important part of market structure, especially now that there's movement in the US where I think it's SAR 121. Now that that's been overturned, banks can actually start custodying, and once they custody, they'll start lending, and all these products will get built up. So I definitely think it's going to be a big theme. It's going to be a massive industry moving forward. I think over time, rates will come down as competition starts to grow. All of these things are good in the immediate term. At the end of the day, look, just because you've got leverage is a part of any system. There's sensible and sustainable ways to take leverage. What I would say is that, particularly for like the retail investors, for me, for example, I know that I would never borrow enough that my Bitcoin stack would ever be at risk. And we all know that Bitcoin can go down a lot very quickly. So I think at the end of the day, I don't really think there's going to be too many people like borrowing like right up to their liquidation level. There'll be people who do that, but most people are actually their Bitcoin is so precious, and it represents so many hours of hard work and saving and hodling and cycles and like surviving horrible bear markets. I think most people are going to be very careful with their leverage. We'll see some people borrow and then maybe they'll buy a house with that capital, but I don't think anyone's going to borrow up to the maximum extent, not at scale. So for now, look, it's definitely a sign of the times. I think we are later stage. I mean, even if we look at things like more immediate leverage, like open interest and futures and options, both of those are almost at all-time highs, really, really quite elevated. And relative to the Bitcoin market cap, if you take options and futures open interest, combine it together, it's currently about 5.6% of the Bitcoin market cap, which is nearly an all-time high. So relative to Bitcoin's size, there is actually quite a lot of leverage, but I don't think those lending desks, for now, it actually just looks like straight futures options, your classic leverage instruments. albeit it's a lot more mature than it was in previous cycles.
I want to pull something interesting up that Seda talked about in his recent presentation in Prague, which I think was really interesting and good that he finally put something together. Because I see a lot of people saying like, oh, I do the Seda strategy, and they are doing it with consumer credit, short-term consumer credit. And as you can see, he kind of listed out like how long of the duration, because the terms of the loan and the terms of the credit is really, really important. It's like how long is the duration of the credit and how high is the interest cost of the credit. And most people with consumer credit have like 10 to 20% and have it short term under 5 years. And Sailor outright just calls that gambling or a loan shark victim. And I do agree with him. And he says like it's basically what the chart says, do it over 10 years and under 10% interest rate, and you're in a good spot. And this is kind of the message that I'm currently saying that just don't do it. Like just have Bitcoin as money and like don't do it. This is kind of like, if you really want to do it, try to hit the orange line. That it comes from Sailor. So I think it's an important thing to say about, because I see a lot of people, I do the Sailor strategy and just like go have like 50K in debt with 15% interest rates, and I have to buy it back in like 18 months, something like that. Probably not a good idea. If that's the best credit you can get, you probably shouldn't get credit in the first place.
That's it. And look, it's one of those things where it's all very alluring, right? Because people, they want to buy as much Bitcoin as they can. And this is another reason why I write the way that I do. I know, and I've been through enough cycles to feel that FOMO of, I don't have enough Bitcoin. And you do anything you can to just like stack as much. And a very tempting way that people do that is they leverage up, because they can suddenly get all this Bitcoin, but they don't fully comprehend. They overweight the risk that Bitcoin is going to go up, and they'll never buy at that price again. They put way too much emphasis on that, and they don't think enough about what if it doesn't do that? What if it doesn't rip to the upside? And there's a few ways you can get blown up. You can either buy too much, and then you get liquidated, and then you actually end up just destroying yourself. Or there's the other one where it doesn't go up as fast as you expected, and because it hasn't gone up enough, you then go out there and people start speculating. They say, I'll take a little bit of that money and I'll speculate on this long tail out. I'll buy some strategy stock, or I'll buy some meta planet. They just go further out the risk curve looking for that quick win. And the problem is that quite often those things don't quite play out, because by the time you're doing this, and if, you can be honest with yourself, if this is the first time that you've taken on a serious amount of debt to go and really to speculate or to buy in financial assets, if you actually look at it and you go, is this the first time I've done this? And if it is, I got asked a question the other day. It's like, when do you think is the best time to lever up? And my answer is probably when Bitcoin was $20,000 and it was in a bear market. That's the best time to lever up. But no one does it back then because it's scary, because the market's going down, right? And they don't see it as a bottom. Why am I getting all these phone calls at 110K to start levering up? Because now people have the confidence that the bull market's in play and I can't go up now, the market's going up. So you get this like transition where people now believe so strongly that Bitcoin is bulletproof that the risk is going to start piling up. And I don't quite think the risk is high at the moment, but it is trending higher. So really, this is why I say we're later stage. Maybe not late stage, but we're definitely later in the game than a lot of people expect.
I was just lucky because I wanted to, once in my life, I was like, I want to have a loan and just like see the experience of that. And it's like very low interest rate. It's like 8 years. And I literally did it at the best possible time when Bitcoin was at like 18K in 2022. But it was not at all strategy. It was just like, I'm a young guy. Back then I was like 23, 24 years old. And I was like, hey, I want to go through the process, how the fiat system actually works, and issue a loan for like, I don't know, 15 or 10K, like not a big amount. And it was so far extremely good. And even though I had a good experience, I'm like, I'll never do that again. Because it's just, I don't know, you have to make the payment monthly, and it's like, I don't want to, it's a weird feeling for me to have debt. Maybe I'm just not made for those financial engineering things that people do.
No, and honestly, like I'm much the same, right? So I have a margin account that I use. I actually use it to accumulate gold, and the main reason is because I've already deployed my money into Bitcoin, right? So my cash is always just going into Bitcoin, but also I have cash flow, so I know that I can service that loan. So what it means, I don't have to put my cash to buy gold, because again, I do like to have a piece of gold as my kind of secondary asset. But if the market reaches a nice area and I just don't have the cash on hand, I can use that margin account, and I'm like you, I'll pay off that debt very, very quickly. I prefer to live in a more equity-based system where I don't like having that debt overhang, and I know that there's like a level of, some people will say that you're an idiot for not taking on too much, take on some debt, short the fiat currency and all this stuff. It's like, yeah, but I also like just not caring about having debt. I actually like being debt-free. Like for me, as a person, that just like aligns with where I'm at. Yes, it means I'm not going to get the best returns. It's like, but I also don't need the best returns. Bitcoin already kicks ass on so many levels. In many ways, just find what works for you. Don't get pressured by all people saying, hey, you've got to go out and buy this stock, or why don't you have any of this, or you're underperforming because you're not fully allocated to this. Like, just do what works for you, because nobody else is managing your finances except you. So do what works for you. Don't push yourself over the limit. You don't have to. All you have to do is not blow up and get to the other side. Have a thesis, have a portfolio, get some Bitcoin in it, and just survive, right? Don't do anything that's going to make you unable to sleep at night, because that's a horrible feeling. Because the truth is, it goes wrong a lot of the time. And when leverage goes wrong, the problem is it eats into what you've already earned. So if you've got to give up some of your collateral, it's always going to be at a bad price, which means you have to sell a lot more Bitcoin to cover that fiat loan if it goes wrong. So, just don't push yourself too hard. There's no reason to.
The first time I ever made any money, I got myself from that money a watch. And ever to the out, this is all self-custody, but it's so freaking important. The simplest, correct, free consultation. If you look back, like if you see in 2015, the Bitcoiners that came into 2015 and are still around, the ones that are the richest and the wealthiest are the ones that never played with the Bitcoin, the ones that never put it on exchange. They always had it in self-custody. They never effed up their own self-custody. They never bought altcoins that just went up and down and went to zero. Just DCAing, self-custody, pure Bitcoin. Those are the wealthiest people that went into Bitcoin 10 years ago. So why do you presume in 10 years it will be any different with some fancy leverage strategy or anything like that? Just stick to the basics, and you will be probably the wealthiest as you can possibly be with that strategy. So I don't know. I think people just want to really do something with their money. They just don't want to just let it sit. I think just waiting and let it sit, it's actually very hard for the human mind.
That's what I say. So hodling is simple, but it is not easy. And that is a very important distinction. It is a simple strategy, and it seems too good to be true, but it just continues to play out. And as an example, right, you mentioned before, I spend all day looking at charts, data, where the market's at, where I think it might go, trying to give my opinion on things. We've also built codes in the background, coding systems, where we're trying to look at, okay, if we implement strategies, if you buy exactly here and sell exactly there, I've played around with all this stuff. It is so hard to just beat daily DCA. It is so unbelievably hard. And this is something that I learned a long time ago. It's not even about, if you're just on a daily DCA wagon, it is almost impossible to beat that strategy. And even with some of the most proficient algorithms, you might beat it by 5%. What I think is much, much better is to train your mind, because markets are actually about your own psychology. It's a simple strategy to daily DCA, but it is not easy, because your brain is constantly looking for pieces of information to confirm something, to change your thesis. You always feel like you have to be mobile and moving. You don't. You just have to understand where the market's at, understand what is going on around you and why the market's moving the way it does. Because if you understand why, you're actually dealing with your own mental psyche. It's not about predicting markets. It's not about timing buys. It's about training yourself to understand why the market moves the way it does. So when things happen, you're not surprised, because so many people are surprised when stuff happens. But if you thought about it ahead of time, if you just like reasoned about these things, it makes the whole journey so much easier. So it's trying to take that simple and get it just a little bit easier. It's all about your own psychology.
One aspect that a lot of people don't talk about with the daily DCA, if you just do that, you don't have to spend the time to actually research those things. So you can go out and make some money. You can go out and provide value for community, or be there with your family, or whatever you want to do. And that's kind of where I'm like, okay, I could maybe outperform Bitcoin, but if you just like have the DCA and don't have the financial engineering things, I just provide value and earn more money and try to level up in my own world. And I feel like that's the best strategy. And if you want to dive deeper, you have an amazing newsletter. You have amazing guidelines for that, and a lot of great educational materials. And that's kind of where I'm at. Yeah, like if you want to do it, yeah, you can kind of weight your DCAs and kind of see, okay, where's the market, and here I'm buying heavier, here I'm not being. But even just doing that is not you will not be like double as good. So like focusing your time and energy on just providing value for community, that's really the thing. I'm like, oh, that's probably your best, most profitable move that you can make, and also good for the world overall.
And I also find, like, because I've been in Bitcoin for a couple of cycles, so, you know, I've been doing my DCA. You know, I used to get, basically I would get paid, I'd pay off my like, I'd just live off my credit card, pay off my credit card, and then everything that was left over would go into Bitcoin. And you just live really frugally. I'm sure many, many Bitcoiners have been through that journey. Once you've been through a couple of cycles, right, you've got your own feel, you've got your own instinct for how the market moves. So now, I don't really, like, as a business, we're daily DCA, because, you know, even me, I spend all day analyzing the market, and for the business, I just let it just daily DCA. It's just like an easy, simple strategy. I don't have to think. Even though I literally analyze the market for a living, we always have that daily DCA. However, there are times when the market, for example, in 2024, I think when the yen carry trade blew up and it sold off to 49K, that was one of those environments where we go, okay, 49K, and we released a video saying, guys, this looks like, it's scary as hell. But this is what bull market dips look like. And it was really, really juicy, and we allocated a big lump sum. And we did the same when it sold off to 75 in, was it March this year? We were talking about this thing, this air gap that we talked about, basically between 75 and 85. On the way up in December and November, there was basically no coins transacting in that zone. And when we're talking about it through January and February, the price is 100, 110, we're saying, guys, just be aware that 85 to 75K zone, it looks like the market might want to go there. I'm not predicting it's going to go there, but don't be scared if it happens. And of course, it did happen. It went exactly to 75K. And again, not because I was predicting, I was just saying this looks like an area where the market might want to test. And when it happened, we lump sum. Because it's one of those things that we've thought about in advance. The daily DCA is going that whole way. We don't care about the price. It's just ticking away. But every so often you can go, now I can actually take some risks. And now I can put that money into the market. And you know, a lot of folks are saying, like, oh, but if we get to 150K, from 100, that's a 50% move. But if you go to 150K from 75K, that's a doubling. That's a 2x. That's literally twice the performance. So it just helps you take that extra amount of risk and like time things, but also there's a lot of people who, if you are going to be taking on leverage, understanding where the market is in the cycle, right? If you're seeing a big waterfall sell-off, is that one of those things where you panic and go, oh man, now I'm going to go and like clear my debts and, you know, make a rash decision because it's like concerning? Or it's one of those things where you go, I've already thought about that as being possible. I'm going to make sure my liquidation level is well and truly below, and like just manage risk that way by thinking through scenarios ahead of time.
How do you actually look at buying treasury companies like Strategy, MetaPlanet, Simon Scientific? It's interesting because last cycle we heard a lot about altcoins. And this cycle, maybe I'm too deep into Bitcoin only cycles. I don't hear a lot of altcoins actually.
No, you are not too deep. This is literally what's going on. There is no demand for the crypto cycle. It's quite remarkable.
but there's a lot of demand now for treasury companies. It's like almost I don't want to compare Meta Planet to an altcoin, not at all. Definitely also not strategy. Like, they're in the Bitcoin ecosystem, they're also providing actual value outside of just buying Bitcoin. And some scientific, of course, like, they're doing great things. So they're very far away from any altcoin, and they are only in Bitcoin. But it's interesting how this cycle, the people that want to get more Bitcoin, and I hear that all the time, like, I want to outperform Bitcoin, they're doing it with exactly those treasury companies where in previous cycles they did it with altcoins. How do you look at that?
No, I think that's the right way to think about it. So I agree with your framing that they're not shitcoins, but the meta around them is this cycle of shitcoins. So some stats. If you go back to the 2019, that's where I used 2019. That was really the period where Bitcoin dominance was rising in the crypto sense. So Bitcoin dominance was rising through the bear market. That's typically how it works. So bear market, early bull, Bitcoin dominance would rise, and then they would have, as you get late stage bull and everyone starts speculating, Bitcoin dominance would fall. So in the 2019 cycle, it was about 1.5 years of Bitcoin dominance increasing, and then it started to plateau in mid-2019 and then started decreasing from there on. We have been in a just non-stop, unrelenting Bitcoin dominance climbing up and to the right for 3.6 years. It has just been unstoppable. It just keeps going up. And we just hit a new cycle high recently. So the crypto ecosystem, the shitcoin world has just, so many people have been waiting for alt season, and it just hasn't come. I've got a whole bunch of metrics and charts and things that I've built over time, because I observe the crypto ecosystem, because I thought this was going to take another cycle, honestly. I'm very surprised it's happening now, but you can plot. I use gold as my benchmark. If an asset's not competing gold, am I even looking at it? Really, Bitcoin's the real benchmark, but you've got to compare Bitcoin to something. So gold is my